My name is Chad Peters. I'm President, CEO, and Director of Ridgeline Minerals. We trade on the TSX under RDG and the OTC under RDGMF. Ridgeline is a precious and base metal explorer focused on the Western United States. We're a hybrid explorer in that we carry both partner-funded projects in which Ridgeline retains a minority but fully funded carried interest to production, as well as our own 100% owned assets that we're aggressively exploring on our own.
Chad, good to see you. It's been a while, nearly a year since we saw you, but you've done it again. Selena, tell me more about it.
Yeah, no, we're really excited. We just announced a new deal with South 32 at our Selena project. The exciting thing about this deal is it's a $20 million US deal to earn for South 32 to earn up to an 80% stake in the project. Ridgeline remains the operator for the initial 5 years of the first 5 years of the term, which is $10 million of spending for 60%. They can then elect to spend an additional $10 million to earn the full 80% stake for a total of $20 million. And what's really exciting about this deal is just like our deals with Nevada Gold Mines, in which we've set up debt facilities, which essentially create free carried interest all the way to production. We've done the same thing again with South 32. So if they hit their full 80% milestone, that immediately kicks off a debt facility, which would essentially carry Ridgeline's 20% stake in the project all the way through to production. So it's a really big deal for us. We're really excited. Selena is a legitimate CRD discovery that we've been pushing along ourselves at a 100% basis for over 3 years now. And I think that bringing in South 32 at this stage of the project is a major de-risking event for us and really lets us get aggressive in moving this project forward.
Okay, let's talk about this, because I think you're right. It's kind of unusual, slightly rarefied air in that sense, but I don't think you're getting the value for this, but people don't understand what it is that you're doing. So let's be clear about the model here. This is not the first time you've done this. Tell me about what it is that these majors think that they're seeing in the projects that you've got. Why have you been able to get these deals done?
Yeah, our business model has evolved a little bit over the years. We started out as a pure explorer, and what we realized over time was, exploration is tough. Funding exploration is incredibly difficult, and we knew we had a really high quality team and great projects. And deciding to bring in major partners into our various projects, I think, was a big step for the company, because what it's doing is for example, to take a step back, we now have $60 million in deals across 3 projects, one at Selena with South 32, and 2 deals at our Swift and Black Ridge projects with Nevada Gold Mines, which is a joint venture between Barrick and Newmont. So you're seeing $40 million being spent with the NGM deals, $20 million potentially being spent with South 32. And what we've done is, I think, you'll be the first to jump in on this, I think, and say, like, look, development is even harder than exploration, right? And so for juniors to make a discovery is one thing, right? But to actually take a project to production, finance it yourself, it's a really steep battle, right? It's really tough to actually make that happen without destroying your cap structure. And what these deals do is they provide, we may have a minority stake, 25% with the Barrick deals and 20% with South 32, but those are essentially free carried interest, right? There's a debt facility that is administered by those companies, which allows us to participate in the development and building of a mine without issuing a single share, right? And for a junior, that's incredible.
Okay, but I really kind of want to dig into the model here. Okay, we'll get into each deal individually in a second,
Sure.
And we'll get into what Selena means for you. Look, there are prospectors out there, and they play the game of the staking. They go and find something that may be of interest, usually to another explorer, and there's some kind of deal structure with, let's put it this way, not a AAA partner. You've been able to attract these AAA partners with big balance sheets, with a large capital commitment to development over a period of time. What is it that you are setting out to find, and what do you present to those guys that they like so much that you're not having to pitch to small exploration companies, say, take the pressure off your own balance sheet?
Yeah. No, that's a good point. I mean, look, we're going after big discoveries. I'm not interested in going after small things. And I think maybe the reason we've been able to set ourselves apart a bit is we started out as a true explorer, right? We were just focused on making 100% discoveries. And so what that meant is that we do all of the background work that the majors want to see. We do all the baseline geology, the geophysics, the geochemistry, we drill these, we do maiden drill programs at every one of our projects. And so we really de-risk these things compared to your average prospect generator, that's doing deals with small companies, right? So I've done multiple deals with majors in my past jobs, working with JVs with Premier Gold Mines and I-80. And so I think what we've been able to crack as a team is, we know what these majors are looking for, from a big picture perspective. We're personally, our first goal is making 100% discoveries at all these projects ourselves. So we're able to generate projects that attract the majors. They're willing to spend the money because we've de-risked these things to a point where, these majors look at it and go, wow, this is a great opportunity. And we couldn't generate this internally themselves, right? So we give them the opportunity to take a majority stake in these projects. And all we ask for in return is we want to participate in those projects, right? All the way to the finish line.
Okay. So, and let's look at the kind of dilution component here, right?
Yep.
So like say, I think this is a good model. I liked it last time we spoke. I like it today.
Sure.
But there are others out there who will say, look, you're just giving away all of the upside further down the line. This is definitely not the right model to follow. How do you answer that?
Yeah, you get that a lot, right? A lot of folks want to see you move a project 100% forward. But the problem is early stage exploration going after truly, if you're really chasing big projects, these things take a lot of capital and a lot of time. So the dilution is coming, you could say, right? You make a discovery, whether you advance that yourself or whether you bring on a partner, you're going to be diluting your shareholders, right? So the choice is, are you taking that dilution at the corporate level and diluting your shareholders and trying to advance it yourself, which we've all seen multiple juniors, crash and burn great discoveries, and it just doesn't work out because frankly, it's really hard to put projects into production. Or you can dilute at the project level, like we've chosen to do. We feel it's the least risky approach to advancing a project and being part of a discovery. Yes, we're diluting at the project level, but our company does not have to issue hundreds of millions of shares or take on, unrealistic debt to try to advance a project. So we think it's the right model, especially in the early space, right? We don't have a discovery at the Barrick project or the NGM projects yet, and we have an early stage discovery at Selena. So there's a lot of work required to get these projects even to a point whether you decide whether you want to take it to production or not. And then I think bringing on partners at these stages is a major de-risking event for us and allows us to participate in them at a meaningful level all the way to completion.
Okay, before we get into how do you value that further down the line, let's talk about the interim stage, which is right. Say take the Selena project, right? You got 10 million plus 10 million, and they're at 80%, and then as a case of you've got the kind of free carry through to where is it through to
all the way to commercial production. Yeah.
There you go. Okay, so the model's the same. The model works. So let's look at what happens at each stage. So the first 10 million bucks gets them 60%. If they decide at any point to say, we're done here, it's not kind of giving us the return that we want, what do? Do they hand that back to you? Do they still retain an equity position? I mean, how have you structured the deal?
Yeah, so we try to do all or nothing deals having pretty significant milestones that these companies have to hit, right? We're not looking to just give away a stake in the company for a small amount. So in the case of the Selena deal, they have to spend a minimum of $10 million. If they spend 9.5 and then say, you know what, this isn't for us, we're moving on, we get 100% of the project back. All of the data that was collected in that project during that time is ours, and we just continue advancing forward. In the event that they spend the full 10 million, they would earn their initial 60%. At that point, there's kind of a, door A or door B, right? They can choose to say, okay, we're going to continue advancing the project on a 60-40 basis. And at that point, Ridgeline would participate as a pro rata partner, right? No carried interest. But if they want to earn a total of 80%, they have to spend an additional $10 million US. And again, that is an all or nothing 10 million. So they could spend another 9 million for a total of 19 million bucks spent and say, you know what, we don't want to do the debt facility. We just want to revert back to a 60-40. That's fine. But that 9 million in spending just goes into the pot and we retain that 40% stake, right? They revert back to their 60% original ownership stake. So they're very steep hurdles that South 32 has to get over. And at the end of it, if they do spend the full $20 million, that immediately triggers their 80% stake. And it also triggers our debt facility, which is they provide essentially an open debt financing for us. We can draw from it any time to meet our cash calls on our 20% pro rata. We pay a 3% prime plus 3% interest rate. So if you think about it, a junior company, we could never raise debt at those kind of terms, right? So it's excellent terms for us. And what South 32 is able to do is they accrue debt on or interest on that debt all the way up till commercial production, and then on first production they start recouping that loan. So at no point does Ridgeline effectively have to cut a check, issue a share, or take on egregious debt to be part of a, hopefully a big discovery.
Right. If they get to the 80% thing. So again, just so we want to be clear on the nuance and detail. So let's say they hit the 60%, they spend the 10 million, they take 60%, but then they say, actually, we don't want to go to the full 80, right? They spend a bit of money, actually, it's still not giving us what we want. Does that kind of kill that asset in a sense that they're sitting there for with 60%? Anyone coming in that maybe did an asset deal, it's going to make it difficult for anyone coming in from outside. It's going to be difficult for you to raise money against that kind of 40% holding, etc. Are there deals to be done? The conversations to be had, something sensible? Because it's sitting on a, say, South 32, like in this instance, South 32 balance sheet, it makes no difference to them, but for you, it's a bit harder, right? So what do you do in a scenario like that?
Yeah, certainly. And it could effectively, they spend their 10 million, they hit their 60. It could fall into maybe it's second in line for development, right? And maybe that slows down the development of the project, or maybe they don't like it, like you said, and they've spent their 60, earned their initial 60, but they don't feel that they're going to do much to advance the project. That's the point where Ridgeline, as a minority partner, could come in, propose some budgets, propose us taking over as majority partner in the project. That's something that certainly we think we have a great relationship with the South 32 team. And I think that's something that we could certainly propose to them. There isn't any structure in the deal that immediately, if they don't spend X amount of dollars, after the initial 60%, that we get the project back. So I think it comes down to relationships and being able to do deals, which I think I've proven we can do, right? So if it were to hit that kind of stalemate kind of position after spending $10 million, I think there's a way to move the project forward, and it would just have to be creative on our end. So
right, okay. Now let's look at how to value something like this. Right, this is your third deal. So you got Blackridge and Swift. You kind of got similar structured deals already, and now it's Selena on board. You're sitting at a kind of 15 million-ish market cap company with stock, down from where we spoke a year ago. People clearly don't understand how to value these things. So can you articulate to me, what does a deal like this mean to you? I said, why have you decided to do this thing rather than raise the money yourself, in terms of that dilution conversation for sure, but more importantly, the value, dollar value of something like each one of these deals could mean for the company, in the future?
Yeah, I think the way that we've set these deals up is that obviously there needs to be success with the drill bit, but in the event that there is a discovery at any, a major advancement at any one of these projects, there is lots of historic examples of minority interests in major discoveries that have turned into massive wins for the minority partner, right? So there's lots of potential for this thing to, for example, like I think a great way to put this is look at Swift. Swift is a NGM project, right? They're spending $30 million to earn 75%. They hit all their milestones. They are chasing another 4 Mile, another gold rush type of discovery, right? High grade underground. If Barrick does make that discovery at Swift, it's not going to move the needle for Barrick, right? That's for them. It's, hey, this is one of many projects we're moving forward. And sure, they may be excited internally, but their stock is not going to move, right? That being said, Ridgeline, as the minority partner, that's the only way for shareholders to participate in a new discovery is through Ridgeline, because they're not going to buy Barrick stock and see it go up 10x, right, on a discovery. So we feel that we can see an outsized response in our stock based on the fact that, any discovery coming in is going to generate a lot of excitement, and we're the only way to really participate in that at the equity level, right, for shareholders. So there can be huge torque on a discovery, and I think the way that we've set this deal up, it really it kind of frees up the path all the way from, those, as soon as you make a discovery, the next question shareholders have is, okay, how are you going to put it into production, right? We don't have to answer that question, right? That question's already answered. Financing is taken care of. We can just focus on the opportunity. And I think that's a huge thing for us. And, right now, of course, I think the reason that we're not seeing a major response on the fact that we have, 3 of these deals teed up is, at the end of the day, we do have to drill some holes to really highlight that first, right? They're great deal structures, they're big partners, and there's huge potential at all of these projects. but without a doubt, there has to be some positive drill results to go with it, right? And I think when that happens, I think we'll see a significant re-rate on our stock, and it'll also, for example, the discovery at Swift or discovery at Selena, that kind of highlights the potential at all of the deals, not just one of them, right? Because people see that hopeful torque on a discovery at one project, and it kind of highlights, wow, they got 3 of these opportunities lined up. And I think it would be a significant thing for the stock.
Right. Okay. So if I'm looking at the 3, if I'm looking at Blackbridge and Swift gold projects, gold 2560 today. I'm looking at $2,560 bucks.
Yeah.
Right. Margins just got better. Whole bunch of free money it seems at the moment. Costs have gone up, over the past 2 or 3 years, but it seems to be sort of stabilizing. Well, maybe salaries are going up a bit, but the margins there are impressive. I don't think people are looking backwards to kind of give you value for the 2 deals you've done before. So what do you say to them? Is it a case of, look, it'll be slow, steady, accretive growth as our partners continue to spend money on drilling, etc. But you're going to have to maybe review us once a year, once every 6 months, whatever the review process is that you think people should do, and say, look, here is how each one of those projects could be valued as those drill bits start talking in terms of grade, in terms of resource, etc. So is this a long-term thing that we've got to sit and wait for? Is that the name of the game? Is that the type of investment we're going with?
Well, what I really like about how we've kind of built the portfolio here over the last few years is we kind of have about 2 different baskets you can pick from, right? And whether you're a pure explorer or whether you like the prospect generator model, we have something that, I think appeals to either one of those groups. And look, on the deal flow side, a couple times a year, right? Review how much is being spent. How are these projects getting moved forward? That's a good way of looking at the prospect generator side of the business. But on top of that, we have our Big Blue project, which is 100% owned by Ridgeline. It's a porphyry copper play in Nevada, BLM ground. I mean, as far as exploration goes, it's really well set up for drilling, great road access. And it's a historic producing copper mine, right? And historically, in the early 1900s, this mine produced over 95,000 pounds of copper at 6.2%, right? That's incredible grade. It's never been explored. That was in a skarn deposit. No one's ever looked and said, okay, well, what are directly adjacent to skarns? Big porphyries typically, right? That's what's the source to the skarn. And what we're seeing is really excellent porphyry potential on this project. So we're going to be advancing Big Blue forward. We're actually doing an IP survey there right now. We're going to be advancing Big Blue forward pretty aggressively, 100% owned. That's something that I really hope that we can come to the market with and really show a 100% owned discovery made by us. And then on top of that, I feel like the deals then become kind of gravy on top, right? Who knows where those are going to go? They're well structured. Money's being aggressively spent across all 3 projects. I think it's going to yield additional discoveries, but it could be 1-2 years to have those really start showing that real big excitement. In the short term, we have those 100% owned opportunity at Big Blue that I think will get people excited.
Okay, so we should compartmentalize and judge you on what you do at Big Blue with copper gold for sure. So in that case, how much free cash have you got at the moment, and what are you going to be allocating to Big Blue?
Right. So we're sitting on about 1.4 million right now, Canadian. Our cash burn is incredibly low as a company, right? It's me, 2 geologists, and now most of our overhead as far as land costs, et cetera, they're being covered by partners. And it's important to point out, we have a 10% management fee at our Selena project as well. So we'll be collecting, there'll be, I think, about a $700,000 budget in the first year. So we'll be bringing in around $70,000, give or take, which helps offset G&A. You could say pay for my geologist time, part of their time. And then in following years, when drill programs pick up, you're going to see substantial spends, right? So, so we're in a good cash position. We're going to put about probably around 150,000 Canadian into this IP survey, heading into the fall. I think it's going to generate a lot of excitement, and then we'll see where we go from there, right? If we want to do a much more robust drill program, we might raise in some additional capital and top up to make that happen. We certainly don't have to. With the cash we have in hand, we could go do an early stage small program, but if we really like what we see, we'll probably try to go a little bigger and do a bigger program at Big Blue.
Okay, so getting management fee, you're allowed to make a bit of margin there, and it'll cover time, and some of that time can also be allocated against your own 100% owned projects. Okay. But so, at this stage, rushing to go and, raise cash, I guess you'd want to see what the market's going to do. Like most people are waiting at the moment to see what the market's going to do come September or so. Um, and money is a bit expensive at the moment. Would you be content and happy to just deliver against your partner projects? Is it just Selena you're doing management, or is that also Black Ridge and Swift?
Just Selena gets the management fee, and then Black Ridge and Swift are being managed by
Operated by Barrick.
yeah.
Yeah.
So
Okay.
yeah, no,
Yeah.
we're in a position where we can comfortably just, like this year alone through the second half of the year, we're going to see about $4 million US being spent just from now through Christmas. About $4 million US spent across those three partnerships. That's huge, right? Like that's a huge amount of spend. And yeah, we can just, if we choose, we can sit back, hopefully let the markets turn, things improve, and let our partners do a lot of the heavy lifting. If we see a nice run in our stock, as well as hopefully the market in general in the fall, and we really love what we see at Big Blue, yeah, we'll absolutely consider raising additional capital, but I want to be a considerable premium to what we're at right now.
Right, of course, of course. And I guess that's the luxury of the model that you've got. Some people say, "Oh, we need to be showing continual movement, therefore potential for growth, etc." I think with your partners, obviously, they're doing that bit for you, which is great, but a heavy lifting. If you've got that choice as to whether or not or how you allocate the rest of your million,
we can turn,
etc.
We can turn exploration 100% owned exploration. We can kind of turn that on or off depending on the markets and conditions. And having the flexibility of having serious spend from our partners gives us a lot of flexibility in how we advance the company.
For sure. So how are you reading the markets at the moment? Because I say a lot of explorers, cash constrained, money's expensive, money's tight, money's sometimes not even available to most. I think retail have really taken a battering over the last certainly 3 years for sure. But it seems out of context with the 2560 gold, you've got 420 copper, silver, just under whatever it is it 29 bucks or something like that.
Doing really well.
The metal prices are doing their thing. It's just I guess confidence in the market at the moment. So I know there's a big part of your conversations and at board level, etc. How are you reading that? How are you scanning that? What's a realistic view of what the near-term future looks like?
Yeah, no, for sure. Like, as a company, when we talk about it at the board level, we're all pretty bullish on what the next, let's call it 2 to 3 years looks like. Certainly, I think like most folks, you look at the long-term view, we think things are going to improve dramatically in the space. That being said, what does the next 6 to 8 months look like? It's tough to say, right? Like I think, just as taking my CEO hat off and just like from an investor perspective, I mean, I can't count how many times I was like, all right, this is it. This is the run in gold that's going to finally kick off, a big rally. And it just has never fully materialized, right? So I think what we're doing is we're trying to make sure that from a capital allocation standpoint as a company, we're being really careful with how we spend money over the next 6 to 8 months, right? For that reason alone, is we just want to make sure that when we start putting serious money into the ground, let's say at Big Blue, and as you said, cash is hard to come by and pretty expensive right now. Well, we want to make sure we're putting money in the ground at a time when drill results will be actually properly rewarded by the markets, right? We're not going to go spending hard-earned dollars when we don't think that it's going to catch the attention of investors. So that's the beauty of our model is while we're conserving cash and being really careful about how we spend it, we're continuing to advance our Big Blue project with early stage stuff like the IP survey. We're staking new projects in Nevada, which is replenishing that pipeline of projects at the early level. Which doesn't require a lot of cost, but just, kind of elbow grease on our team's part to really take it to that next level. And while that's all going on, we're actually seeing serious money being spent by our partners. So I think it's a great business model. It's working well for us. And when the markets turn, I think you'll see us become far more aggressive as a company as well.
Right. And doing business in Nevada continues to be okay. We're not sort of seeing any regression on that front.
No. I mean, Nevada's still one of the best places in North America to be operating, right? It's certainly been slow. I think you look at a lot of Nevada juniors, we're all in the same boat right now. Just like everybody, most juniors right now are still struggling aside from, massive discoveries, right? So yeah, it's kind of business as usual in Nevada. But personally for me, actually, when I worked for Ewan Downey, he always hit home really hard to me. When the markets were terrible is when Ewan was consolidating, right? That's when he was going in, trying to buy new projects, and really be aggressive at the asset level of trying to grow the company. And so that's how I've been approaching things as well, right? We're staking ground, we're assessing opportunities, right now, everybody's still in the dumps and juniors are having a hard time raising money. And so as a group that I think has a good relationship with multiple majors, we're able to kind of be a little bit more aggressive. We're also tapping, we've actually in the past spoke with the Barrick team as well. Like, hey, what is non-core to you that you think, might be an opportunity for Ridgeline, right? And we've had those discussions with groups like Barrick as well. So yeah, we're trying to, I think in the slow times like this, we're just kind of, hunkering down, conserving cash and trying to find that next big opportunity and doing deals like we're doing at Selena right now, which I think is a pretty significant deal for us.
Okay, well, Brad, appreciate your time, and obviously news hot off the press. That's fantastic. I think we're going to see you in Beaver Creek. Maybe let's dig into some of the assets rather than this kind of commercial conversation we just had. Because I think if most people understand how you make money, they'll probably be comfortable with the, well, let's start looking at the assets and try to understand how much money potentially we'll be making. So appreciate your time today. We'll see you in September.
No, thank you. You bet.